Today is not a great day. Soy has been crashing yet again. The question is, when will this stop? Is there potentially an opportunity to buy the dip here? Let's have a look at the on-chain data, the data most people are not considering. Now, there is something specific to this crash. This is soy, and yes, the overall market went down as well. But have a look at this. This is soy relative to the others market cap. One might make the argument that the intermediate rallies that we've seen every now and then in the soy price, they were just the overall altcoin market appreciating. Relative to the rest of the market, soy is just bleeding quite constantly since the end of July. And so I'm not a fan of looking at US dollar charts of individual crypto assets because there are two factors that influence the price. It's the idiosyncratic movements, what is a particular project doing, but it's also the overall macro environment. And in the end, whenever we buy an altcoin, we want to get more performance compared to the benchmark, compared to say Bitcoin or Ethereum. So it is all a game of opportunity costs. This is just soy in US dollars. But check this out. This is soy relative to the others market cap. The others market cap is all the altcoins that are not in the top 10. Here's the recent decline since July. And maybe this is a buying opportunity. When we just draw those parallel lines, we might be close to a potential bottom. A rally from the current level to the top is roughly 75% outperformance. Here is soy relative to Bitcoin. Unfortunately, that's not performing too well, which is understandable. Bitcoin tends to get more and more purchases through traditional finance, through the ETFs and through the treasury companies. And so most altcoins are currently bleeding against Bitcoin. It is not just the demand by Wall Street that's making a difference. There's also a difference in the supply schedule. Price is a result of the intersection between demand and supply. And when the supply of a token grows faster compared to the leader in the market, compared to Bitcoin, then if the demand doesn't grow faster as well, then of course the relative performance to the benchmark isn't that great. Now we are currently at 3.6 billion soy tokens in circulation. 1 year from now, that will be at 4.3 billion. So the supply will grow by almost 20% in a year. For comparison, Bitcoin's inflation rate is only 0.8%. So really, soy has to outgrow Bitcoin a lot to break out of the medium-term trend. Now let's have a look at the adoption metrics. Let's see how much activity there is on the soy chain. Is it reasonable that soy is going to grow by 19-20% per annum and potentially more than that in order to beat Bitcoin? Let's have a look. Currently, there's still quite a bit of upside potential for activity. In the last 24 hours, we saw only 258 million of trading volume on the soy chain. Compare this with Solana, where we had 8.7 billion trading volume. So it's roughly 40 times what we have on soy. Or here we've got Ethereum, that's 3.8 billion. That's more than 10 times. Or over here, we've got the base chain, 1.8 billion. So with soy only being at 0.25 billion, there's definitely some potential for growth. Now, just because there is potential doesn't mean that that potential gets realized. Do we actually see positive growth rates of the soy chain? Over here, we've got the total value locked, or TVL, on soy in US dollars. This tends to go up over time, but there is quite a bit of volatility. We moved from 2 billion all the way down to 1 billion in the first quarter of this year. Here's the same chart measured in soy tokens. And there is an interesting decline over here. We are going to talk about this in a second. By the way, if you're enjoying this video so far, then feel free to give it a like. It will help to spread the word. It will tell the algorithm to show the video to more people. Thank you very much. The chain fees continue to stay low despite the adoption. That's good. So the blockchain is not bottlenecking. It is still efficient to transact on the blockchain. The app fees tends to grow. So that's an expression of growth of the ecosystem. Here are the decentralized exchange trading volumes. So there's a lot of spot trading happening on soy. And the perp trading volumes are rather low. Now that's for the perpetual futures directly on the soy chain. This is not the trading of the soy token in the perpetual futures market across all different chains. That's very different. Soy is not a chain that's majorly involved in perpetual futures trading, but there are many people that bet on soy via the perps. Because on the 10th of October, we had this flash crash. You might remember the massive market disruption. Hopefully you didn't lose any money during that drop. The altcoin market cap on average fell by 48%. But have a look at the drop of soy. Soy dropped much more. It went down by 84%. Now, where does this come from? Why did SOI perform that much worse during this crash? And what kind of consequences does this have going forward for the price? Let's have a look at the open interest. Check this out. SOI is the 18th largest cryptocurrency in terms of market cap. But in terms of open interest, so how many people are betting on tokens, SOI is at rank number 8. So SOI has disproportionately above average bets on the price via the levered perpetual futures. Many people are speculating on the SOI price without buying SOI directly, simply just by betting on SOI via levered derivative instruments. And so during that flash crash, when the price went down by more than 80%, most longs got liquidated and there were a few shorts left, thus the funding rate turned extremely negative. The remaining shorts had to pay the longs in order to stay active in their position. That has of course neutralized since then, but the damage had been done. 180 million of direct liquidations and an even sharper decline in open interest, which went from 1.8 billion down to 800 million. So 1 billion of open interest erased. More than half of the speculative capital was gone from the SOI price. And we talked about this risk of very high leverage through perpetual futures on the SOI price before the flash crash on the 10th of October. So feel free to check out those prior videos on SOI on this channel. Now there is correlation between open interest and the spot price. When there are more bets on the price, the spot price tends to be high. When there are less bets on the price, the spot price tends to be low. So is this potentially a buying opportunity since there's now much less leverage embedded in the asset? Have a look at this. Historically, there is this connection, right, between spot and the open interest. This chart of SOI relative to the others is of course very enticing. This might look like a buying opportunity. I don't like the overall trend though. This is total 3ES relative to total. So what does this measure? We are looking at the market cap of all of crypto that is not Bitcoin, Ethereum or the stable coins. So we look at all of the volatile altcoins. How important are they currently? Are they currently outperforming or underperforming? SOI of course is part of that. And unfortunately, since the beginning of 2018, so for roughly 7 years now, we tend to see long-term underperformance. The altcoins have underperformed the rest of the market by 57%. And they're still at the upper end of that trading range. There's still potentially another more than 50% drop. And that's what worries me. We can't just buy and hold SOI because of the tokenomics, because the supply is growing by 19% per year. And it's also very risky to hold a diversified portfolio of altcoins anyways. Yes, there's potential for a short-term trade, but I'm too conservative to buy this falling knife. I don't like the negative momentum in the last 4 to 5 months. What I find fascinating is that the development within the altcoin market seems to move contrary to what's happening in Bitcoin. So in Bitcoin tends to do better, then the altcoins are rather weak. When the altcoins tend to do better, then Bitcoin tends to be weak. What we're seeing over here, that's the others dominance. So how much of all of crypto is in the altcoins that are not in the top 10 in terms of market cap? So it's a percent range that tends to peak out at around 20%. It's currently at 7%. Now have a look at the following. Let's have a look at the peaks and the bottoms. Let's also see where there's a potential support. That's maybe here. And let's now compare this with the Bitcoin dominance. So how much of all of crypto is currently in Bitcoin? Whenever the others dominance is peaking, the Bitcoin dominance tends to be low. Whenever the others dominance is bottoming, the Bitcoin dominance tends to be high. Here's another such peak where the Bitcoin dominance is high and the others dominance is low. So there seems to be a direct inverse correlation. And since the beginning of 2022, the altcoins tend to underperform and Bitcoin tends to outperform. And Bitcoin tends to trade in a range. It tends to peak at a dominance of 73%. So once Bitcoin is 73% of all of crypto, the altcoins historically were very cheap. The problem for altcoins right now is that the others dominance still continues to go down and Bitcoin dominance still tends to go up. And while the others dominance didn't necessarily always bottom at the exact same level, it tended to be somewhere around 5 to 6%. And currently we are at 7% dominance. And again, Bitcoin dominance has way more room to go until the altcoins become historically cheap again. So really, it does make sense to be selective when purchasing alts. It's maybe not the best time to have a diversified altcoin portfolio because most of them are likely going to be worse medium-term performers. What we see over here is the others market cap. So how much capital is currently in the altcoins that are not in the top 10? We're not looking at the others dominance, but at the others market cap. And the altcoins do have a hard time getting above 500 billion market cap in aggregate. Here's a similar metric. This is total 3ES. So that's all the altcoins that are not Bitcoin and Ethereum, and we also exclude the stablecoin. This metric has a hard time going above 1 trillion. There is a fundamental problem though with all of those metrics. So with the others dominance, with the others market cap, with the total 3ES market cap, the problem is that market caps are not a good indication of where prices are going. And prices in the end determine our performance as an investor. Let me show you what I mean. Here as a representative example, we've got WorldCoin. WorldCoin tends to peak at higher highs in its market cap over the very long term. Yes, we've got our volatility. Currently we tend to dip a little bit, but in general, over time, the market cap is going up. Now compare this with the long-term price chart. That's very different, right? It's not going up from peak to peak. The peaks are lower over time. And the reason for that is token inflation. It's the number of WLD or WorldCoin tokens that get issued over time. The supply grew by 8x over the span of a bit over 2 years. That's of course very extreme, but in general, we tend to see most altcoins expanding their supply quicker than Bitcoin or Ethereum or Solana over time. The effect is very drastic. So every week we see more than 1 billion worth of unlocks in the altcoin market. And that's just for the altcoins that are tracked here on this website, Tokenomics.ai. And so I believe this is where the market inefficiency is, where we can actually exploit that inefficiency and make money. Because it seems to be obvious that something like WorldCoin should go down in price over time. It might not go down in market cap, but it will go down in price if the supply expands this way. Yet the vast majority of traders does not agree. Have a look at this. This is the perpetual futures funding rate. So with perpetual futures, we are betting on a price. We are not buying the asset. We are betting on the price to go in either direction, to the long side, so it goes up, or to the short side, it goes down. And because the funding rate is positive most of the time, most traders on the perpetual futures market are betting on WorldCoin going up long term. They're also betting on it going up right now. Again, despite the supply expansion, despite what history has already told us. Isn't that interesting? Most perp traders got wrecked because of the token inflation. Or in other words, the token inflation is not properly priced into the funding rate. So really, the game should not necessarily be to try to find the next small altcoin that does another 10 or 100x. Here's the performance of the smaller altcoins in the last year. Most of them went down. Yes, the larger altcoins did better. So here's the performance of the top 100, but still, even they, in aggregate, went up only by 43% in the last year. While at the same time, Bitcoin went up by 71%. Ethereum went up by 69%. So even the biggest of the altcoins aren't doing great. The smaller altcoins do even worse. Have a look at this. This is Hyperliquid. This is the funding rate of WorldCoin right now. It's 11%. The longs have to pay the shorts 11% per annum to bet on rising prices. In other words, when we bet on falling prices of something like WorldCoin, we are even getting paid 11% per annum. And then we are making money on top of that because of the long-term underperformance. This is the WorldCoin price relative to Bitcoin over the long term. It went down by more than 90%. But now imagine we are flipping this around. We are betting on falling prices of highly inflating altcoins. At the same time, we bet on rising prices of Bitcoin, Ethereum, or Solana. So instead of having this relative performance, we are getting this relative performance. Isn't that much more attractive than even just buying Bitcoin itself? This is a performance of 900%. Bitcoin during the same time period made a performance of 289%. So there's clearly alpha in a strategy like this. There's also volatility, like we see over here. But this is a quote-unquote buying opportunity, right? We double down on being even more long Bitcoin and even more short WorldCoin. If you, of course, believe that long-term the tokenomics will prevail, which they have over years. And again, this is just an example. Many altcoins work like this. The overall altcoin market sees massive unlocks every single week. And the reason why those unlocks exist is because the venture capitalists, they want to pull out their capital. The team wants to pull out capital. The insiders, the KOLs, etc., they want to pull out the capital. They are all dumping on the retail investor, and they are dumping at a very quick rate. That is very harmful for the altcoin market. That's why we see this performance across the board. I'm following this kind of strategy already for 4 years. In the early days, it was with borrowing and lending platforms like Aave. Nowadays, it's with perpetual futures. And this is my long-term performance here. So this is a monthly chart. It shows the last 4 years. Had I just dollar cost average into Bitcoin, I would have gotten this return here at this light gray line. But because I also bet on falling altcoins over time, I got long-term outperformance. And this is really what crypto should all be about. It's about the constant alpha. It's not about finding the 1 or 2 lucky moonshots. We want to simply compound our capital reliably over time. I have made many videos on the topic, but you don't have to watch all of those videos. You can simply stick with 3 of them. The first one is over here, using perpetual futures to bet on relative valuations. Then this one over here, risk management with relative valuation bets. Very important. People that didn't have this in place, they got wrecked in the recent crypto shakeout, which was, by the way, one of our most profitable days. Everybody has lost their money, but we had our risk management properly in place. And one part of that risk management is, of course, also setting effective stop losses. So that's video number 3. In total, all 3 of those videos combined is roughly 1 hour of content. Once you've watched that content and you've joined the community, I will share my favorite trade with you. If you do not make money with that trade after opening it and after holding it for 1 month, then I'll refund the premium membership fees to you. So really, you are not risking those $125 per month. If you do not like premium, if you do not make money with that trade that I will send you after joining, then I will just send that money back, no questions asked. A link to premium will pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium.